Wait a minute. Is there a big secret to scalping? Well, we're going to take a look at that right now. Welcome to Supermarket FX. My name is John. Here we talk about ways to simplify your trading and free you from the belief that trading can't be done. Now, the simplest thing you can do is trade a bear chart. I like to keep it simple. You know, if you've been following this channel, that I don't use any indicators. I just look at where price is going, where it's likely to react, and then I take an entry on a lower time frame. So what you can see here is CAD JPY 15-minute chart from today. Now, I actually did take a trade earlier today on prop firm challenge. I haven't had much time to do that. I've been kind of consumed with learning the processes of editing and all that fun stuff. Now, what I want to show you is today when I was looking at the chart, I was marking off areas like I normally would, setting alerts so I don't have to sit at the screen all day. And how I marked it, when I was marking my area, price was in this area. Now, I was trying to figure out where price was going to go. Now, when you're looking at this, it's hard to know for sure. Now, what I ended up doing is I decided to take a look on a higher time frame just to get a bigger picture. So when you're first looking at this, you can see on the 15, it's in a downward direction. So the trend is down for the time being on the 15-minute chart. And I don't really pay attention to the trend as much as people think because it can change at any moment. So, you know, a trend is a trend until it isn't, you know. So I could see it's going down on the 15-minute. Now, what I ended up doing is I decided I wanted to get a better picture. So I went on to the 4-hour and I can see that what was going on now, or actually 1 second, let me show you here. So no, we'll stick actually with the 4-hour. So we're looking at the 4-hour, and at the time it was up, and I was thinking that the next likely spot that price would go was, and where I would expect price to react was below previous structure. So, and it was awfully close to it. So I don't feel like it's going to change direction yet. I would expect it to at least go to that area before moving back in an upwards direction. So what I ended up doing is, now that I know that that was where it was at least planning to go at the time, I was just picking the shortest target. It could go much farther, it could go here, it could go down here. You really don't know where it's going to reach for. But as a short-term goal, I was expecting it to go at least to there. So now that I know that, I was looking on the 15 and I was trying to decide where price was going to change direction. We know price doesn't go in one direction only. It goes up and down all the way. Now, so what we did here is I was looking for a likely spot where it would change direction, and at the time it was somewhere around this area. It was coming into the area, and this was just a void that I was expecting where price may react. So I seen that it was reacting in that area, and I ended up getting in on this trade today. Now, so I ended up getting in just on this bullish candle. Now, it wasn't a very strong bearish candle, sorry. It came into my area. There wasn't a lot of exhaustion here. It's like there really wasn't any sign other than the wick up on top. So this was a more aggressive move, I guess. And on the close of this candle, I entered in on the trade, and I held on to it without really touching the position at all, interfering with it. I wanted to see if it would reach its target. Now it started coming back, and I decided at that point I would take, I'd move my stop loss to break even, and I took partials. So you can see what it ended up happening is it came up and it actually stopped me out before going in the direction that I thought it was going to go. Now, if I didn't move my stop loss at all, I would have reached the target. But I'm still fine with this. It ended up, being a losing trade, but I was still profitable. So this was simple. You can do this over and over again. You don't need to complicate anything. And I wanted to show you something else as well. So price is always moving. It always has a destination. So we really don't know where they're planning to go, but you can see here is an example that I have marked off where price comes up into this area, and then for some reason it changes direction, and we really don't have an answer to why that's happening. Some people could say this is an order block, but there really isn't any big clue as to what's going on here. Now, if you drop down to the 5-minute chart and we mark off this area right here. 1 second, I'll show you what I'm looking at. Oops. This area here, you can see there's a void here in between the first and the third candle where price hasn't done anything. You can see that it hasn't come up to fill it. And now if we move across the chart back to where price changed direction, if you look at this, what do you see? You can see price completely filled that area on the 5-minute chart before changing direction. We've seen this before. I've talked about this before, where if you look at a different time frame and you see this, this could be an indication that price may be changing direction. Now, the good thing for us is we scalp the market, so we're not looking for very long runs. So using this might be a powerful tool when trying to take a piece out of the market. So you said when you see this, yeah, little clues. Say, like I said, looking at the 4-hour just to see if it's in an important area, because normally I don't pay too much attention to it. But let's say that you're thinking price is heading down, according to the 15-minute, you're looking at it, but then you notice on the 4-hour that it's in a key area where you would expect price to react and change direction, even though it doesn't mean that it will. This could be a big clue on what you should be doing next. So if you have a strong opinion that it's going down, but on the 15, but the 4-hour is telling you something different, maybe you should stay away from it unless you can develop a bullish bias and take an entry. It would make more sense taking a bullish entry. So this is all it is. You're just looking where price goes, entering in on a trade, managing it, moving your stop loss to break even or half break even, or walking away from the trade and letting it play out. It doesn't matter what you want to do, just as long as you're comfortable with how you're trading. And taking partials along the way, just enough, secure yourself from losing anything. It's not a bad day. You could still lose several times through the day and still be profitable. So try working on this, practice this over and over again, and you'll see this is the best way to do it. And as always, if you have any questions about this, comment below, reach out to me.